Hello, friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and today we're going to do a little market update. It seems appropriate this week to talk about the market. You know, it's been tough for the last couple months, really, to give any sort of a reasonable market update because everything has been so in flux. And, you know, it's only Tuesday. You're going to be watching this episode probably when it comes out on Friday or over the weekend. And there's a lot going on this week. And so I'm going to talk a little bit about the things that are happening this week and some things that maybe if you're watching this episode and you weren't paying too close of attention, maybe you should go back and look at to see how things really unfolded. But nonetheless, we're going to talk about what's going on. So look, the good news coming out of the weekend is it seems like we have a peace deal with Iran. Now, we've all heard this story before, right? And so it was widely expected that the market would open up here on Monday, and today's Tuesday as I'm recording this, and we would see some massive improvement in interest rates. But the reality is the deal's not signed yet. Matter of fact, not only is the deal not signed, we don't know the particulars as I sit here today of this deal. Even Congress is going, we don't know the particulars of this deal, and we should probably know about this peace deal with Iran. So a lot can still happen. It is widely expected that a deal will be signed this Friday, the day that you're watching this in Switzerland, between the U.S. and Iran to bring this, deal to a close, this war to a close. We are starting to see ships move through the Strait of Hormuz. That's expected to just accelerate, but we know we have months potentially of backlog of ships that are locked up there. And in the meantime, people have found alternative ways of getting some of their oil and, some new, like any, situation like this, people will find their own paths. So it'll be interesting if things return back to the way they were at the end of February before this conflict ever started. I suspect things will return to normal. The question is, how long is that going to take? The good news is, as I sit here today, the price of oil, a barrel of oil is already down to $75 a barrel. That's a pretty significant improvement from where we were, which at the peak, well over $100 a barrel, I think pushing 120. And we've been sitting in that, 90 to 100 range for quite some time. So to see this initial drop down to $75 a barrel this quickly is great news. Now, I believe that we were in the high 60s before this conflict started. So we're not back there yet. And I don't know if that's going to happen super quick. Part of what has to happen is we have to refill a lot of the oil reserves that have been depleted during this conflict. And so there is going to be a pretty strong demand for oil. And, basic economics tell us that could potentially keep the prices a little bit higher. So it's probably going to be a while until we see them back to engagement, pre-war levels here. Now, the 10-year this year has not moved a lot. We're sitting at 4.437 today. Again, I think that we're not going to see that move until this deal is inked. We've heard so many times from this administration that this war is concluding, that there is a ceasefire or whatnot, and then the next day bombing is going on, or we hear from Iran that, nope, there is no deal. We don't know what they're talking about, right? So this has been going on for months now. So let's hope that this is the real deal. And I think if it is, I think it's next week when you're going to start seeing real market movement. Now, a couple things are, taking off like a rocket, no pun intended, but SpaceX IPO was this week, and it's done very well, continuing to go up, which is not always the case with these IPOs, but it is with SpaceX, taking Elon Musk to be the first trillionaire. Did you miss that? Because it's literally everywhere on social media. So everyone knows about that. But what it's also done as of today, the Dow has hit a record high, soaring past 52,000 on the Dow. Now, surprisingly, though, the NASDAQ and the S&P both showing down a little bit as I record this podcast. So mixed news there. But I think with the optimism about this deal and oil prices coming down, the stock market overall has been enjoying some record gains. The other big news that we have this week, and personally, I don't want to say it's bigger news than bringing this conflict in Iran to a close, but this is the thing I'm talking about, that if you did not watch this, you should go back and watch it. And that is, as we sit here recording this today, Kevin Warsh is leading his first Federal Reserve Open Committee meeting today, with the announcement and press conference tomorrow. So this, you guys, is where we're going to learn a lot. There's been a ton of speculation, from myself included, about what to expect from our new Fed chairman, and this is going to be our first meeting. I personally am pretty happy that it is going on the same week that it sounds like we have a resolution to this conflict, because it's going to give Kevin Warsh the ability to be a little more optimistic than he might have otherwise been. So we'll see how that goes. I'm very interested in the statement that's made at the end of that, so I would go back and watch or read that, and I'm very interested to get a sense of how he's going to handle the Q&A afterwards, right? It was widely expected that he's going to be maybe a little more tight-lipped, right? Maybe shorter Q&A, type of a session. So we'll see. What I expect, though, to see is, first of all, I don't think the Feds are going to change the overnight cost of funds. I do not expect a change at this meeting. So I think rates will stay exactly the same. And I think that's what's priced into the market. No one's expecting anything there. So any move by the Fed would be a surprise and would absolutely be a market mover. But I think what we might hear from Kevin Warsh is a little different take on how they're analyzing the market on a go-forward basis. I think he's going to be a little more creative. I think there's going to be maybe some areas of the economy that we never heard Jerome Powell talk about that we're going to have Kevin Warsh bring into the conversation a little bit. And my guess is he will use those factors to create a little bit of a better picture on why we might be able to lower rates sooner, right? So that would be the tone that we're looking for, especially those of us who want to see lower rates. Those of us in mortgage and real estate probably fall into that category. So it'll be interesting to see how he supports his ideas, and I think that they may be a little different than what Jerome Powell, matter of fact, I'm pretty convinced they're going to be different than what Jerome Powell leaned on as his kind of the why behind the decisions, and not so much the why, but the what we would need to see in order to do this in the future. I think you might see some different answers there. And that's why I encourage you to go back and watch that in its entirety. If you're watching this and you haven't seen it yet, I'd go back and for yourself, just listen to the words that he says, understand it. Just getting the cliff notes from a news broadcast, in my opinion, if you're in this industry, is not enough. You should really get a feel for how this Fed is going to react now and into the future. I think that it's widely anticipated that with oil prices coming down, that the inflation that we've seen recently, dare I say, is transitory. Now, I'm going to be shocked if the new Fed chairman uses the word transitory, right? Because we all remember when Jerome Powell used that word, and that post-COVID, transitory inflation never went away. So it's kind of a bad word to be said, and I'd be shocked if he uses that term. But let's be honest. I mean, it is widely anticipated that the shock that we're seeing in inflation right now is transitory, is tied to the price of oil, and will be short-lived if nothing else. So all those are things that I'm going to be looking for. It's going to be interesting. Now, one other thing that I looked at, it was actually Barry Habib shared this on his morning update. It was either today or yesterday, I'm not sure, but they were showing a graph of demand, homebuyer demand, as we kind of wrapped up the first quarter of the year, right? So that would be that end of February, very first part of March is when that report came out. And you could see marketed increase in demand as interest rates were coming down at the end of the first quarter. That's good news for us because that tells us that that demand is there, and what needs to happen to unleash it is an improvement in interest rates, which we may be on the precipice of with this conflict coming to a resolution. So just be prepared for that. I don't like to be overly optimistic without a reason behind it. But to me, that's a really solid data point that we can point to and say when rates got down into that low 6, high 5 range, we saw demand surge. And I suspect that's what's going to happen. Now, in the meantime, what's happened is that builders have pulled back. You can see this. He showed a graph as well that showed that builders have slowed pretty drastically over the second quarter here, right? Over the last couple months during this conflict. And so what we end up with is if rates do improve, as is widely anticipated at this point, we have a lack of inventory on the new construction side and more than likely a ramp back up in demand. Now, we do have good listing activity on the resale side, but even as I talked about in my last podcast, inventory levels year over year are actually down. Now, you wouldn't know that if you lived here in Washington State because it feels like houses are being listed everywhere, which is partly seasonal, right? We see that a lot this time of year. But year over year data is showing lower inventory overall. So less inventory on the resale side, less new construction because of a pullback by the builders, a potential increase in demand. You guys, we got to let our clients know about this right now because what this tells us is those people who've stepped to the sideline when it comes to purchasing may be in for a little bit of a rude awakening when they get back into the market because we know that these market conditions can change quickly. We know that where we have seen some sellers, maybe cutting prices in order to move inventory with these high interest rates, you see a reversal in that, and all of a sudden it goes the other direction, and we see less price reductions, and we even maybe get back to like we're seeing in Chicago right now today with multiple offers happening, right? And so just be aware that, there's documented data that shows what happens when interest rates improve. And it's not like we have a ton of inventory to go sop up right now. So this could change the dynamic from a buyer's market to a seller's market literally overnight. And it could cost your clients money if they're not prepared to move quickly as this market starts to shift. So you guys, I'm going to leave it at that because honestly, almost everything I talked about today is things that are happening as this week unfolds. And that's not lost on me. I still want to do a podcast about it because I want to bring these things to the forefront. If you're not thinking about them, I know so many of us are in the day-to-day grind and you may not be paying as much attention to what's actually happening in the financial markets. And it's a good opportunity in a week like this to maybe go back and revisit exactly how these things unfolded to help you have a better grasp on where we're at in the market today and the factors that drive those things moving forward. Look, I strongly believe that as a mortgage and real estate professional, it is incumbent on us to be students of the market. I think our clients count on us for that. We want to differentiate ourselves from every other interest rate that's out there. It's easy to be a commodity in this industry, and one of the many differentiators is understanding the market at a high level, or at least working to improve your knowledge of what the market's doing, why it does what it does, and give great advice to your clients. In addition to being a real advisor, a wealth consultant to your clients as it relates to real estate, obviously. So anyways, you guys, with that, I want to thank you for your commitment, your time, and attention to watching these episodes of Market Shares. It means a lot to me. If you enjoy this content, please share it with somebody. Let them know what we're doing over here at Market Shares. And that's it. I'll see you next time on Market Shares. Take care.